thank you all for coming today. I mean, I think this is a super interesting topic. We had a couple of the panelists up here pretty much at each other's throats, drinks at the bar before, so there's gonna be a really lively discussion. I first became interested in this kind of subject matter when I was staying at a Stay Alfred property in Dallas. And I was going down for Triptease Direct Booking Summit, and I was looking, and there was the Statler Hotel, and right next door there was a Stay Alfred. The Stay Alfred room was about 70% bigger and about half the cost. And I started to think, like, how does this play out in the long run? What is the value proposition that made me come stay here? Was it price, or did I actually care about that extra space? And where does this play out, and where is equilibrium for this market? So today we're gonna kind of talk about what these different facets of the market are that are coming online, these new products, and whether these are tech companies or not. We have a really insanely awesome panel today. We've got Rami Zaiden from Lifehouse Hotels. So Lifehouse Hotels just closed a $30 million funding round. They are building a really, really cool new type of hotel that I'll let Rami talk about. We have Adam Harris from Cloudbeds. Adam just kind of put a nice new notch on his ring. And he crossed 1 million rooms, something that most technology companies are never able to do, especially in the startup world. It's reserved for the Sabres and the Amadeuses and the Oracles, so congrats to Adam on that. We've got Drew Patterson from Transparent. Transparent is really like the STR for vacation rentals. Drew is also the indirect reason I was telling him before this that I ended up in this industry, and couldn't be more thankful for that. And then we've got Elizabeth Winkle, who's the Chief Strategy Officer at STAR, which needs no explanation. But I'd love to get started and let you guys each kind of talk about your backgrounds and specifically like how you guys you kind of interact with the alternative accommodations market in your current roles. So Rami, maybe we'll get started with you.
Sure. So I started Lifehouse about 2.5 years ago. My background was on the real estate private equity side of the hotel business, and I basically saw an opportunity to build a brand and management company that had a little bit more tech-enabled operations. And so the problem we're trying to solve on the business side is to try to drive higher NOI to hotel owners. We use software to do a lot of that. Both on the revenue and the expense cost-cutting side. And then on the brand side, we've tried to build a kind of responsive lifestyle brand that responds to the buildings that and the neighborhoods that we're kind of taking over and renovating. And so far we've got 12 hotels in our first kind of 12, 18 months. And we're focused in the small hotel space where cost-cutting drives a huge percentage increase in NOI. Versus a big hotel where that percentage increase is a little bit lower. But we're expanding, and our largest hotel is 132 rooms today.
Awesome. Adam, you want to talk a little bit about your background?
Sure. So we sort of fell into this. My co-founder and I, we were doing technology development for a wide array of industries, one of them being hospitality, and also just the sort of restaurant retail world. And OpenTable was becoming really, really popular at the time, and both of us were world travelers, and we were constantly asking ourselves why in these sort of developing worlds that we'd love to travel to, was there not the convenience of just clicking and booking and confirming a reservation? Much of this alternative accommodation industry is still very much offline. Hopefully us as a group is bringing that to consumers quicker. Anyway, long story short, we sort of stumbled upon this with a client who very much had the old sort of APIs, touching APIs, and this hodgepodge of layers of technology, and we thought that is not sustainable long-term for the hotel industry. We need to simplify, follow the guest journey, and create a technology stack that was completely agnostic. So whether it was a hotel, a guest house, a PMS, or vacation rental, the same sort of principles file. It's all about the guests. It's about that experience. And so if we built a technology stack that enabled that, we probably had a future. And we obviously crossed a major milestone, and that was pretty humbling to us as founders, considering we've been in the market for 5 years.
Cool.
I first became interested in the short-term rental space of the market. Actually, it was a few years back, about 5 years ago, when I was running a company called Jet Setter, and we were flash sales business, sold a lot of hotels, and started working with a couple of property managers, and was shocked at the level of engagement we saw from consumers around the short-term rental product. And what you saw was lower prices, a more compelling proposition in terms of the amount of space and access that the properties provided and the locations made sense. And that really opened my eyes to the power of short-term rentals as a new form of accommodations. It got me interested in the space. And alongside that, as you could see the industry starting to evolve, it seemed clear that there was a need for data sets and tools that served as the data source of record for short-term rentals. In the same way that STR has allowed so many of us that are affected by hospitality in different ways, whether those are brands or management companies or owners or investors, that same need existed in the short-term rental space. So this was a big part of where the industry was going. You heard Pierre's comments about just how large the short-term rental industry now is in the overview before we got on. It was clear even 5 years ago that this was coming. And so that's what we've dedicated ourselves to, is how do we provide the data source of record that allows all those affected by the short-term rental industry to make sense of where this industry is going, what supply trends look like, what demand looks like, what pricing trends look like, and how you begin to see the interplay with other forms of accommodation.
Hello, good afternoon. I became interested in this space really when I joined STR. My remit was to take the business global, and I built the international business out of London. And for those of you who work outside of North America, you know that alternative accommodation, lodging looks very different. You have traditional accommodation like ryokans and guest houses, and it's very much part of the accommodation landscape. And so really trying to understand and quantify the impact of this additional accommodation, particularly as we're seeing the rise in tech and tech-enabled access between hosts and guests, because traditionally that was one of the barriers for guests to be able to stay in a traditional accommodation, alternative accommodation, whatever we want to define. And so we at STR are looking at how do we talk about total market supply, total market demand, really going beyond as we see new product, new entrants, and being able to track that information.
Thanks so much. Yeah, so, I mean, Adam and I were talking about this beforehand. When you go on Expedia or Booking today, there is no difference between the inventory that you're seeing, and more of these markets are coming together. So even before we get started talking, I'd love to, one of the things that we've all disagreed about on this panel is what actually is an alternative accommodation. Like, you've got the Lifehouses, the Lyrics, the Guilds, the Saunders, the Oyos, you name them. There's this different kind of hotel company that's coming online. There seems to be an element of vacation rental in many of them. There seems to be a technology element to many of them. But I'd love to hear what you guys each think. How do you define alternative accommodations, and how do you think that's going to change in the next few years here?
I'll go first. So I think, just to clarify, I don't think Lifehouse is necessarily an alternative accommodation. I think what we're trying to do is operate hotels better, and software helps us do that. I think alternative accommodations to me is the commercialization of residentially zoned buildings for the use of transient rental. And I think Airbnb really solved a problem there by using apartments more efficiently and having homeowners and home renters rent out their homes to travelers seeking more affordable accommodations. And then I think the Saunders of the world have done a great thing with institutionalizing the management of that space. I think in terms of what that product is, I think the alternative side of it is that it's using residentially zoned buildings for the transient use, and we'll get into what that means long term.
Yep, absolutely. And that points out exactly, I think, where all the confusion comes from. And one of the reasons that we're really passionate about this panel is, I think when you look in the media, you get this conflation between a bunch of different types of companies. And it's like, if venture capital is attached to it, everything starts getting talked about in the same way. And I think what we end up talking about are very different businesses. And so I think it's really interesting just to see, and your point about alternative use of multifamily and commercial and hotel property together as this definition for alternative accommodation is really succinct and resonates with me. Adam, do you have any? I know that you have a little bit of a different opinion on what's alternative. And
I 100% agree with that. I think at the same time, we look at more of what the consumer is driving, which is part of the reason this is happening. So the consumer behavior is drastically shifting from purely based on the fact that the largest population of travelers is, born after 79, and that will continue to be, for quite some time until we reallocate what the sort of definition of millennial and Gen Z and et cetera. So when I think about what they want and where they're staying, if you take the classification of the actual asset, that's where the person is putting their head on a pillow, the definition of what they were looking for could be a vacation rental. It could also be a hotel. It could be something in between. And from our perspective, we're looking more at what the buying behavior and what that ultimately is and what you're creating, to me, is alternative. It's not the Lowe's hotel with the same box that looks the same irrespective of geography. And it's really more about connecting the guest experience to the actual environment that they're staying in. And I think that's where we debate internally more than like the technical component of the segment that's being determined. So.
Yep. And Drew, I know you have a lot of access to the data here, and you can look at it, not Adam's taking more of the consumer approach of like, what does the consumer see and like, what are they thinking about when they're looking at different kinds of accommodations, like what's in their consideration set. From the data perspective, like what do you consider an alternative accommodation? And is it this short-term rental? Is it only the short-term rentals within multifamily? Is there a certain duration? How do you guys think about that at Transparent?
So we've got a more expansive set of characteristics. I think, Rami, I really like your definition. You know, this is repurposing residential real estate for short duration stays, and I think that's right. I think that's come with a bunch of benefits that consumers care about. You know, it means you get access to different kinds of neighborhoods. It means that you have a space to stay, and that includes a living room and a kitchen and other amenities that otherwise wouldn't traditionally be available in a hotel. You know, and in many cases, it means it's available at a very different price point because the cost structure of these operators looks different than what hoteliers have had in the past, maybe for quality reasons or other. But you know, certainly that's translated into lower prices than consumers have seen in hotels. As we look at the world, you know, we think of the universe of including that supply which we can find on channels like Airbnb and on HomeAway and on Booking, as well as property managers that have grown out of this, let's call it informal space of vacation rentals and the like.
Cool. Elizabeth, too.
Well,
Yeah.
I'm in agreement. I think, Rami, your definition was so succinct. I cannot.
Mic drop.
Right, exactly. But I think what's really interesting is, and just to Jordan's point and also Drew's point as well, is when you start to conflate some of these we actually lose some of the known identity. So we've seen hostels, we've seen traditional vacation rentals. Those are sectors that have been defined and clearly defined and operated for decades. And so I do think as we think about utilizing a term like alternative accommodation, my biggest challenge with that is it requires us to have context for that definition. Alternative to what? And we have to then think, well, is my definition of what the comparative piece the same as someone else's? So I think that's one area that I sort of shiver every time I hear alternative accommodation. But I love, and how we think about it within STR is typically that the urban rental short-term use of what traditionally had been a long-term lease property.
Absolutely. And the thing that's really kind of gotten me passionate about this is like thinking about the long-term implications of adding this new supply online. And so, you know, Drew, you'd point out to me previously that like service departments aren't new, and like they're actually not an alternative accommodation when you look at some of these vacation markets. And so what do you guys think the implications are for the hotel industry if we're starting to add all this supply in the alternative markets of like using multifamily properties as hotels? How do you think that plays out in the long run for the hotel industry? Do you think it adds any risk in terms of RevPAR? Like, what happens if these companies are not as liquid as we thought they were in a downturn, and we have all this new supply online? Like, what ends up happening to their local hotel markets and tourism economies?
Well, I think we've already started to see evidence around that in certain periods of time. You know, I was talking to someone earlier today, and we were talking about, you know, what kind of price compression you've seen historically in Super Bowl markets, and how aggressively hotels can push price in conditions like that. Markets like that, we've historically seen compression and now have a lot more supply. Demonstrate, I think, the way that this short-term rental inventory can be a shock absorber, if you will, around demand drivers. And I think, you know, as you imagine what the world will look like in a downturn, that will be exacerbated. You know, I think if hoteliers have struggled to, let's say, collude or coordinate as effectively as the airlines have around pricing, you know, you imagine how many price decision makers there are when you start to factor in each individual short-term rental operator, you know, and how well they're able to maintain price in that environment. So I think you'll see a lot of downward price pressure.
Yep.
Yeah, I think that that's the biggest is right now we're in an expansion cycle, and yes, we're coming towards a point where we're not seeing as much expansion as we have in the past. But when you look at some of the global figures around international arrivals and the fact that we've exceeded 1.2 billion in international arrivals, and you think about how that translates into demand, there's a lot of demand to go around at present day. And when you start to see any sort of decline in that demand or any sort of correction in that demand, what we're seeing in the data is markets and submarkets that have high-performing hotels, where you're seeing a premium on ADRs and occupancy, we're also seeing significant supply in short-term rentals. So where hotel demand is strong, you also see strong and large supply increases in short-term rentals. And the question then is are those short-term rentals absorbing existing demand that would have come into that market, or is there share shift from other markets where typically that market would have been full and those guests would have gone elsewhere, they wouldn't have traveled at all? And of course that gets exacerbated when you see any sort of decline in demand. One of the other things around the compression, Drew mentioned compression. Compression typically has a large geographic impact, and we are starting to see those markets where you have high-performing hotels, you have a large supply of short-term rentals. The year-on-year growth rates are muted, and so certainly we're starting to see some of that, but I think it's still pretty early to tell.
Yep.
Yeah, I agree with all of that. I think a couple of things. One, I think the data that we've seen, at least, and obviously there's different sources, shows that as travel and demand for travel and experiences is increasing, RevPAR is not increasing at the same rate, which kind of alludes to the short-term rental space taking share. And then I would also say I think there was a glut that of existing short-term or residential supply. I don't necessarily think that will continue to grow at the same rate. It would never make sense to build a residential apartment and use it for a hotel versus building a hotel, because the NOI per square foot of a hotel is much, much higher. And that's why you've seen the trend of taking hotels and making the rooms ever smaller.
Yep.
So I think it is the alternative accommodation space is just repurposing existing inventory to drive more income. And I think there's a ripple effect with repurposing residential use for transient that has an impact on housing prices, which the government takes very seriously. And I think I'm curious to see how that evolves, because regulation typically lags innovation, and it'll be interesting to see how housing price creeps relative to this space.
Yep. And Rami, so when you look at how you're growing your business, you're going out with a traditional development model, convincing owners to come onto your platform. It seems a whole lot easier to go out to a multifamily owner and say, hey, I'm going to lease up a floor of your building. Why is that not a path that have you guys explored it? Like, how do you think about that model in terms of where you're taking Lifehouse?
Yeah, so as I mentioned, I used to be a real estate owner predominantly in my short career, and it's a different business to take on real estate risk and own real estate versus to operate hotels and real estate. So it's that's one thing. Two, the capital that goes towards an operating business requires or demands or wants different returns than real estate capital. And two, part of the reason that I switched from being a kind of a private equity real estate owner to an operator was I saw there was an opportunity to really focus on building an operational platform and focusing on operations, and it's just a very different business.
Yep.
And I think there will be a marriage over time between brand and management, and that's what we're doing. And I think over the last maybe 15, 20 years, there's been a divergence of brand and management,
Yep.
and I think those things are really connected. But yeah, for us, we could definitely raise, well, actually, I don't know if I could, but raise venture money and sign leases. I don't like the risk reward personally for my business.
Yep. And when you guys think about the structure of the industry now, like, it's clear that there are some conflicting interests between owners, management companies, and brands on the franchise side. Do you guys think, I mean, Rami, you're saying that you think those two models should come closer together of the brand and the franchise or the management contract, because presumably the brand is maybe, it's the value proposition isn't as strong as it used to be at some of these big players. When you have 72 Marriotts in, you know, South Beach, like those owners are competing with each other. Do you guys think that that organizational model needs to change from an innovation perspective?
I'll just be quick, and then I'll let you guys sort of hijack the conversation. I think consumers are now more educated and are empowered than they ever were before. Brands used to have a lot of value when you didn't have great reviews online or great photography or social media. Now, you know, travelers have that access to that information. So if I'm staying at the Charlton Inn versus the Hilton, I can see photos of it now, I can see reviews, so I'm less inclined to just pick the reliable Hilton because I can rely on this other information. So I think brand value over time will diminish. I think franchise fees will diminish, and I think management and brand will work together.
Yep. Adam, anything to add there?
Totally agree. We're already seeing one of our largest new channels of property types is coming from deflagging. It's, you know, they see tech enablement, they can come off the brand, they don't see the loyalty anymore, and we're able to give them lift and the same exposure through the massive distribution channels that we've you know, created, and it's been a wonderful sort of transition, and I think it's just going to be faster over time, and to your point, it's because the consumer has flexibility and choice.
I would push back a little bit. I agree from a consumer perspective, but when you think about it from the investment perspective, you know, brands do provide comfort and security when it comes to capital. And I think we're seeing that with short-term rentals and where the capital flow is. They're going to the branded short-term rentals. They're not going to the unbranded short-term rentals. So I think balancing that equation, and certainly, you know, consumers are driving a lot of company behaviors, but when you look at who's financing it and what an underwriter or a lender or an investor would need to feel confident about where they're spending their money, brands still bring a lot of value to the table.
I agree with that, just to be clear. And I used to be a lender, so I mean, a flagged hotel gets much better debt than an independent hotel. Yep. So I totally agree with that.
But it's interesting that the brands still only penetrate sub 15% of the overall supply in markets, right? So even though they do have the capital access, they're not accelerating to the point where it's defensible, and so anyone technically can join in this fund. So when does the institution professionalize to the point where it locks out the independent, like myself, as an individual owner who can join in and be competitive to some extent?
I think lenders are also the slowest to react to innovation, so I do think it's somewhat of a short-term phenomenon. And even so, if lenders underwrite on trailing 12 NOI, and this is beyond the scope of this presentation, you know, after a year, you can get better debt as an independent anyway.
Yep.
I do think when you look at if you look at the evolution of the hotel industry, in 1990, 2/3 of hotels in the U.S. were independents, and now more than 70% of hotels in the U.S. are branded. So you've seen just a complete evolution and switch. And while I don't think it will follow the exact same pattern, I don't think it would be beyond comprehension to think you're going to see more branding in this space and more consolidation of brands.
I agree with that too.
One of the things that I think it's a great point, Elizabeth. One of the things we think about is you know, as we look at consolidation, what's the right comp between the hotel industry and short-term rentals? And you know, if we think of the hotel industry as demarcated between brands, management companies, and real estate owners, as we look at the Saunders of the world or the Vicases of the world, what are they most akin to? Are they most like a Marriott, and will we see supply brands take shape, or will these really be management companies? You know, it's clear to me they can be good at management companies. I guess it's an open question of whether or not we'll see brands take shape in the short-term rental space. And to Rami's point, you know, if brands have become less powerful in the hotel business because we now have access to reviews and information at the level of an individual unit, you know, the short-term rental industry has really come of age with all that information being available. Airbnb made reviews a core part of how they determine quality from its inception.
Yep, absolutely. And I think, one of the ways that, I mean, it's great that we've all kind of agreed on Rami's definition that we should canonize right now. If we're defining alternative accommodations as this new use for multifamily or mixed use within a multifamily asset, when the media is talking about this, again, there's this level of conflation of just talking about tech or virtual concierge or all these different aspects. I've heard Oyo previously talking about using AI to predict site selection, but like Starwood Capital has great data to project, pro formas on where they should be developing hotels and what those assets are going to perform like. And I think the way that we have this discussion and that's really effective and helps understand is like unbundling the hotel experience. And it's like, what is a hotel operation from like start to finish? It starts with site selection and development. It turns into a product, which includes design and build. It has operations, which is guest facing and your staff engagement. And then you have marketing, revenue, and distribution. So what I love to do is kind of use that flow to kind of structure this and say, okay, if we're defining this alternative accommodation as hotel within multifamily, is there a sustainable competitive advantage with regards to site selection or development? And how are those companies scaling up? And do we see that as being like something that will kind of sustain in the long term and have that competitive advantage? So how are you guys seeing these properties being developed or these assets being developed that's different than hotels? And as an owner, would you rather develop an alternative use or a traditional hotel? Rami, I think we know how you feel.
Well, maybe this isn't exactly responsive to your question, but I think in the same vein at the very least, one of the things that strikes me as curious is, we're seeing hotel brands start to move into this space. I think Marriott's been the most visible, but Choice has done this, Hyatt's made investments in this space, Accor has been quite active in this space. One of the things that's interesting is the way they're going to market, the commercial model they're building is basically an OTA-based commercial model, right? They're going to market as distributors. They're charging a 15% fee on reservations that they can generate for those property managers. They're working with a bunch of local property managers. They're not actually building franchise. The hotel franchises aren't building franchises in the alternative accommodation space. At the same time, we see these new entrants that are kind of building franchises in this category. And it's curious to me. I don't have a good answer to it, but I'd be curious what the rest of you guys think. Like, why doesn't Marriott want to build franchises? Why doesn't Choice want to build franchises in short-term rentals or alternative accommodations? And why are they opening the market to these new entrants to do the
But
same?
aren't they sort of testing a hybrid between traditional hotel with accommodation style that might meet some of the definition of what people are interested in? I mean, look at extended stay. They've had kitchens, they've had living rooms, and they've had bigger floor plates that the traditional hotel has, and they've been around forever. You look at Daytona Beach. You have condo hotels that have 400, units in there, and they're operating at 40% occupancy, and they're happy with that because their turnover cost is so low. This has been done for many, many, many years, and so to Elizabeth's point, it's like history will repeat itself, but no sort of price elastic sort of entry point hotel brand has ever become global except for Oyo, and their standards of what Oyo is delivering from a hotel side is probably questionable, and I think there's been a lot of press around that. But you have Knights in, Premier in UK, you have brands in Asia that are really not transcending borders because the consumer doesn't care about the brand. They're looking at for the accommodation style, the type, the budget, and that's all they're after. If I'm looking for an experience, then I might go after the independent, and I might be driven towards the independent's geography, the style like a Lifehouse. And that's what I'm technically looking for. The definition blends a wide audience of brand or of inventory type. I mean, for example, one of the most successful properties in San Diego will be a accommodation style that has the ability to do 10 beds in one unit. And so they're selling it as a flexible sort of group housing style. Yeah, Dana. And so what's interesting is that's just purely based on the traffic type of consumer flowing into San Diego, and they're flying under the radar of the hotel requirements. I think we're not going to see big brands global. I don't think it's.
Yep. Well, and Drew, go ahead.
No, go ahead.
No.
I was just going to say, I think, and I don't want to pretend to be able to answer for a Marriott or a Hilton or a Hyatt or an Accor, but when I think about the motivation behind moving into these industries, it's not to scale. moving into the sector, it's not to scale. They have a growth plan that they are executing. It really is around, going back to Rami and Adam's first point, it's around consumer choice and making sure that they maintain their core customer regardless of where that customer is staying, wants to stay. If you look at Marriott's footprint with homes and villas, they are in locations where Marriott does not currently have a hotel. And so the alternative is that guest would be staying at a competitor to Marriott, whether it be a hotel, whether it be a short-term rental, whether it be a vacation rental. And so they're trying to capture more of that guest spend. And it's a different motivation than utilizing the brand for growth. So I think it's different from that perspective.
Yeah, it seems like they're hacking their way into those markets where they don't have the development, which is ultimately what alternative accommodation is doing, is saying, Rami, you're going to go the traditional route and grow this business, this new contract at a time. And what these guys are doing is basically saying, hey, we're going to growth hack this brand, and we're going to go into the back door. We're going to say, okay, we're going to grow this supply so that we can get into those management contracts on traditional hotels in the future. That's kind of always my hypothesis on this sector and like where they want to go, because once you get to a certain scale, it doesn't make sense to go floor by floor. And if you have growth expectations from a SoftBank or a large growth stage investor, like you just can't grow at the rate that you need to meet those kind of valuations. So it seems like what's really interesting about what you said is that Marriott's doing the same thing, and they're like, oh wow, this is like a really interesting way that we can provide a product in a market that we don't exist in. And once we have that proof point, and once we have the relationships in that market, we can now go and get those, probably the management contracts as well. And so, yeah, Drew, you kind of jumped us ahead into the revenue and distribution and marketing aspect of things here, which we'll get to, so patience. But Elizabeth, you had talked about, STAR was obviously acquired by CoStar, purely just to keep those names together. But you have this interesting view of multifamily and hotels now, and obviously you're on the STAR side of the business, but you kind of are blending over on both sides. From the development perspective, you had some really interesting insights about how multifamily development is changing, and not just the hotel industry, because of some of these alternative accommodations deals. Can you talk a little bit about what's happening there?
Sure. So I think, one thing too is just think about the scale of the sector. So the hotel industry is about $600 billion in value. When you look at multifamily, you're talking about $3.3 trillion. So it certainly opens up a lot of different avenues there. And I think what we're seeing, and I'm still very early days as part of CoStar, is utilizing short-term rentals to bridge the gap during a lease-up period. And so you have cash flow optimization, you have revenue optimization, and I think one of the things that's interesting, and one of the outcomes of all of this that may happen, may not happen, but I see at this point, is really changing the terms of leases. And certainly we're seeing those 12-month leases are no longer the norm, but they're still in defined lease terms, so it's 6 months, 8 months, maybe 13 months. But the goal typically in multifamily is to drop everybody out in the summer months where you have your highest demand periods to be able to re-sign an annual lease. And when you think about the introduction of short-term rentals into that profile, all of a sudden you're able to yield differently, and you're less concerned about dropping people out into high demand periods because you can bridge the gap with an alternative type of product within your own inventory. So I think that's going to be an interesting thing to watch. The other thing is we're seeing, companies like Y Hotels that are coming in specifically during a lease-up period to provide that cash flow and to be able to remove some of the friction that occurs during the lease-up. The other thing we're seeing in multifamily is owners wanting to control their inventory and be able to ensure that everything's not in the hands of their tenant, because ultimately it's their asset and they want to protect the asset. And so how do they have an agreement and a cooperation with their tenant by making it a short-term rental friendly building, so that, and it's a little bit of a defensive play rather than an offensive play, to ensure that they understand how their inventory is being activated and they're still able to control that.
Yeah, I love how Y Hotel is like narrowing in on this niche and just solving a problem and not claiming to do anything outside of that. They're like, we're going to help you get better underwriting terms on developing a multifamily building by leasing it up quicker. So it's really interesting to have that perspective. I want to skip a little to the operations side of hotels. Like, there's all this talk, Rami, even in the press release, not the press releases, but the media coverage of Lifehouse, there's talk about the tech that you guys are building. What I really want to talk about is in alternative accommodations, and then in your view of how you guys are running a hotel business different than a traditional management company for your case. Like, what is really fundamentally different in how these properties are being run? And obviously we'll talk about how Lifehouse properties are run versus a traditional hotel. Do we think that it's a changed human capital model or staffing model? Is it different tech that's coming in? I mean, and Adam, you could obviously come at this from the perspective of you are helping these hotels run more efficiently on technology, and they are not alternative. They're, there's obviously a lot of those that you work with as well, but love to, maybe Adam, we could start with you on how you think these new kinds of hotels are fundamentally different in the way they operate, and is it a tech or is it a human thing? What's going on there?
I think the opportunity to eliminate human mistake is probably tech-enabled. So one of the things that I still laugh about Focusrite is Glenn Fogel got walked at the hotel, and that was purely just a technical issue. And what at the end of the day, that created a really poor experience, and then ultimately came on stage, and then became a social media experience, and so on. And so when we think about and I'll go back to Citizen M. Citizen M has been one of my favorite brands from day one. The reason why I had to check in at a kiosk was there's a limitation in technology that would allow me to go straight to the door at the time it's first started. And so, yet we have brands like Bode in Nashville, for example, where they'll text me my 5-digit PIN number that gets me into the gate, that gets me into the door lock, that then expires, 10 minutes after I check out. And if I want, I can text them back and say I'd like a late checkout. They'll charge me $20, and it activates a few more hours. So that experience to me was phenomenal, and that's traditionally generated or driven by what VR or the sort of vacation rental industry has done with the deeply integrated technology to door locks to access, et cetera. Hotels now have that through partnerships with Cloudbeds or other systems out there, and so that limitation of what the real experience that we're ultimately after is there. The sort of stacking of technology no longer needs to exist, and it can be very seamless from start to finish for a guest, from the chatbots to the check-in experience to even the feedback loops that could be continuous. And so from our perspective, we're saving a bunch of human steps that would normally be there, and making it very seamless to what creates moments of awesomeness, and that drives that sort of loyalty back to what they ultimately experience, which is probably what you're after too, and in some of the tech that you're investing in.
Yeah, I would say actually we've been focused more on back-end, non-consumer facing or guest-facing tech. I think backing up a second, I think what we learned from Airbnb was consumer utility curves are changing, and the ROI or the benefit of a lot of labor in the P&L doesn't drive ADR. So we said, okay, where is there an expense that's not helping the consumer experience, and try to eliminate those costs first and foremost. And I think that paradigm shift has evolved, and I think candidly the short-term rental operators have kind of discovered that and manifested that, and I think if you apply that to hotels, there's probably something there. We haven't necessarily, in fact, we haven't automated. Can I talk about Lifehouse now?
Yes.
So we've tried to not automate any position that is connected to a customer, to a human interaction with our staff. We've tried to automate the transactional nature. So instead of a front desk behind a desk conducting a transaction, we have a community manager that kind of acts as a front office manager, bellman, and front desk agent. And so we find that we have a lower FTE per room ratio and a higher NPS score per that ratio. And that's kind of how we are thinking about it, is let's invest in things that consumers care about. But candidly, we're not the most advanced on the consumer tech side. I think this example with Bode is beyond what the scope we have today.
No, and I think the reason we can shift the paradigm to the consumer utility is because operations from a back end are streamlined,
Sure.
right? So that person who normally had to be handling distribution or normally had to be handling check-ins or transactions, that's all automated. That time savings gone. Right. It can then shift, just to your point. So we're seeing our properties have less FTEs. We're seeing the time shifting savings on a per day basis growing by the hours. So like our average property saves 4 hours per person that they employ per day. And that's a huge operational savings. It takes someone 15 minutes to learn our platform. So imagine, Elizabeth, we were talking about 1 in 8 people are going to are employed by hospitality as an industry, and you have 50% turnover, as Mogul sort of talked about during their Innovate pitch. That's a lot of turnover. That's a lot of people you got to train. I mean, just imagine Marriott shifting everyone off Marcia. That'd be $1 billion experience just training. So we've looked at it from operational simplicity, creating very beautiful user experiences, automating wherever possible so that they can do the community
Absolutely.
approach.
Drew, you were probably one of the earliest people thinking about automating the check-in experience, and how have you seen some of these, and obviously working with Properly now, and how they have that. Can you talk a little bit about how you guys changed the staffing model within vacation rentals versus hotels through Properly, and kind of what you're seeing in the check-in experience, just how these alternative accommodations are staffing compared to regular hotels?
Well, I think it gets to, I'll give you, I think Rami described it incredibly well, which is,
I'm just gonna go.
Hotels have overserved their customers, right? And like the amount of labor that's gone into a stay isn't commensurate with the returns that they're generating. Do you really need, same day cleaning? Do you need to have someone staffing a front desk? Do you need to have someone on property who is a phone operator? These expenses haven't generated a meaningfully different consumer experience. And to their credit, I think a lot of these alternative accommodation brands said, wait a minute, we don't have to have these things from the beginning. We don't have to employ our cleaners. We can contract out for that. We don't have to have anyone on property because, frankly, we can't. It's just in an apartment. And so we have to think about an operating model that works quite differently. But that translates to a significantly lower cost to service a guest, and that means that they can price themselves at 30% less than a comparable hotel. That's powerful. It's not that those can't be matched by the hotel industry, but there's a brand promise that these operators have started with. Hoteliers have to figure out how to convince their customers, wait a minute, the mints on the pillow that you're used to getting because we had someone who went to each room and cleaned them every day, and they got a union work contract, all those things. You're not going to get that anymore. That's not part of our promise, and I think that's a challenge for an existing brand.
Yep, absolutely. And I think, and that kind of gets us into the next segment of revenue management, pricing. Adam, Cloudbeds has built your own lightweight RMS for your clients. Rami, you guys are building some revenue tools. And Elizabeth and Drew, you guys are both working on the data side of the hotels and VR, alternative accommodation space. Do you think that revenue management is going to converge? Are these assets going to be priced similarly in the future, or are these fundamentally different assets with different price elasticity curves and different ownership structures? How do you guys see revenue management evolving for alternative accommodations versus hotels?
Can I jump?
I mean, there's no doubt that these are substitute products for each other, and that
Yeah.
consumers, look at alternative accommodations or short-term rentals as a substitute for hotels. I think the ways that short-term rental operators set prices are different than the ways hoteliers do because they have different inventory. They have 1 unit of inventory as opposed to 20 units in a given room type. They have multiple owners potentially of those properties, whereas a hotelier has 1 owner that owns the building. And those constraints mean that the practices of short-term rental managers will look different from the way hotel revenue managers set prices, but they're absolutely going to bleed against each other in determining what consumers pay for a place to stay at night.
I think the only thing I agree with Drew on that, and I think the other thing too is this is assuming that all guest stays are the same, and we know they're not. Certainly when you're traveling for business versus leisure, if you're traveling as a single traveler versus with a family versus extended family, if you're traveling for group. And so I think that that's the other piece is, yes, there's absolutely going to be, there is the substitution effect, but there are also some pretty distinct guest profiles and guest segments that we can't just paint with the same brush.
I agree with all that, and I think every consumer and every traveler has its own utility curve, and you have to price to that curve, and it's a very complex equation, and that the price elasticity of demand is not only variable by property, it's variable by season and day of week. And so to suggest that there's one algorithm that's good for a market, it's too broad. It doesn't work like that. And so I personally, I think a lot of RMS tools, and maybe you'll disagree with me on this, are really helpful relative to the status quo because they help operators do their job more effectively. But I do think that the algorithms are unique to each property. Yep. And in an optimal world.
I'm just going to agree with Rami.
And Adam, you're like, because you're sitting across not necessarily alternative accommodations, but vacation rentals and hotels, and Pi kind of helps them price in exactly the same ways.
Yeah, I mean, I think from our perspective, we're looking at all of it bleeding together, as Drew said, and we're helping our properties be conscious of what the competition might look like across all segments.
Yep.
And, we give, multiple comp sets that they can create, and so they can sort of craft what they ultimately want to look at long term. That will become more algorithmic, and eventually we'll have some AI built into it. Inside joke. But long story short, the point is I think we're going to see this bleeding effect, and that's going to mean, like you said, seasonality, length of stay, all those different things are going to factor.
Yep. And I think, Drew, you kind of jumped here a little bit early, but I think the holy grail in this space is like the Amazon effect in e-commerce, where you disintermediate Google and you're able to build a brand where consumers come to you directly. Do you guys see these alternative, Rami, I think what percentage direct bookings are you guys doing?
65 across on our website, 65% across our portfolio.
Yep. And so I mean, on the hotel side, how have you guys been able to drive so much in terms of direct bookings, like so quickly before you built that brand at scale?
Yeah, we haven't talked about it much, but there's software that can, building an entire tech stack from scratch, especially a central reservation system, allows us to do automated digital marketing on these meta search channels. So Google has innovated quite a bit in the last few years, and I think we buy ads on Google in an automated way, and it's getting ever more sophisticated where you can, buy ads for days that you need help, and so you're really, really targeting your audience. So it becomes a really efficient marketing tool. Whereas historically, if you don't own your tech and you don't own your CRS and you can't do retargeting effectively, you're paying an ad agency, and it's 10% of your ad spend, and it ends up being more efficient to just sell on OTAs or reduce or spend time negotiating your OTA commissions down.
Yep. And do you guys, the rest of you, do you think that there's going to be a world where, I mean, obviously there's a ton of consumers that go to the Marriott Bonvoy app or Hilton Honors for the loyalty programs. Do you think that some of these alternative accommodations players are going to be able to hit enough scale where the consumers are going direct to them for travel experiences, kind of like they do at Airbnb or Expedia or Booking today?
Yeah, there's certainly brands that build loyalty. I guess it's an open question of how big those brands are and what the scale will be. Will we see a brand in the alternative accommodation space that is the scale of something like Marriott? Time will tell.
And do you think it's feasible at the current pace without getting all in on the hotel business, based on kind of like the market share that you've seen from some of these players?
Well, these guys are a long ways away from that shift.
Yeah.
So we did a piece of research recently looking at concentration. The top 10 operators in the short-term rental, the top 10 brands in the short-term rental space in North America represent 5% of all rooms in North America. You compare that to the hotel industry, the top 10 brands are like 70% of all rooms. So you'd have the data better than I.
Well, I would just to piggyback on what Drew's saying, I think if you look at, there have been about over 90 brands that have been announced since 2008. And I chose that date because that's really when Airbnb started. About 63 brands actually have properties attached to them. So of the more than 90, only 63 have properties associated with them. And in that tenure between 2008 and present day, 675,000 rooms have either converted into those new brands or been new builds within that new brand. This is a global figure. During that same time period, we've seen 3.5 million rooms open or convert into existing brands. So, I think to Drew's point, never say never, not to put words in your mouth, my view is never say never, but to be able to create a global brand at scale even at the pace of growth that we're seeing today, is still going to take a while. And there is still that, that tendency to go towards what is known versus what is unknown. And the reason that the hotels are launching new brands is they think there is an untapped market that's not currently being satisfied by a current brand. And that's going to continue to grow as well. It's not as though hotel brands are going to stop creating new brands.
Absolutely.
To footstop the point, Sonder today, the leading urban property manager, has in the order of 5,000 listings. Right? Vacasa, the leading leisure market property manager, in combination with Wyndham, it's what, $300 million-ish acquisition, has 20,000 units under management. I mean, these are businesses that are growing really fast and are really exciting, but the scale that they have in the market relative to the scale of the hotel brands today is really, really small.
Yep, absolutely. Well, I think we're out of time here, guys. Thank you so much. I think the big takeaway here is really dive in when you read an article about alternative accommodations or the new hot tech company raising a bunch of money. Try to figure out what's really going on in the underlying business and how that's impacting the markets around them. I don't think it's a blanket. There's no good, there's no bad. It's just these are new things that are being introduced into our industry, and it's important to really not take it at face value, question it, understand how that impacts regulation, how that changes the model, and what's really being innovated on. And so with that, thank you so much, and enjoy the rest of the conference.